Hi everyone. Hi everyone. Today we are talking about a beginner's guide to buying your first home. We talk a lot about buying an investment property, but it really starts with your home and making sure that you are set up correctly, you're capitalizing on the market so you can invest in the future. And it all starts with your home. We have seen quite an increase in inquiries from our prospect clients looking to buy their own home. And we're going to be talking through some of the things that are actually driving that. Why are people considering buying their first home? So, if you're a first home buyer and you're of two minds and you're wondering whether now is the right time or what you actually need, how much savings you need. So, we're going to be going through that. So, it might give you some practical steps on what you need to do to take the next step towards buying your own home and potentially stop paying rent if you are paying rent. So today we are going through a beginner's guide to buying your first home. What are we covering today? So firstly, we'd be going through the reality of renting, right? Like rents have skyrocketed in recent times and it's left many people at the mercy of inflation. We'd be exploring some disadvantages of renting and unveil the benefits of home ownership. Then we'll go through some numbers necessary, like in terms of the money or funds you require to purchase your first home. And we'll walk through some calculations and equip you with some skills to make sound financial decisions moving forward in terms of whether you are ready to buy your home. And we'll also be talking about building your team because often people are in the dark about who do you need the assistance from to make a successful owner occupied or even an investment purchase. So we'll be diving into what each of these roles involve and what you should be looking out for. After that, we'll also be navigating the purchase process. Being a first home buyer, often you're in the dark and looking for lots of answers, and maybe you're spending a bit of time on Google. So we're going to distill all that information into a step-by-step process as to what happens start to finish as you go through this process and any pitfalls that you need to avoid. So, in terms of the reality of renting, right? So, we've been hearing from many of our first home buyer clients that their rents have gone up, and they've actually indicated that because it's actually gone up, they really want to consider moving into their own home rather than continue paying rent. It's actually motivated them to buy their first home. Or alternatively, the second part could be going down the investment path so they can hedge themselves against any rental increases. As if you are renting, then you would be aware that rents for units and houses have actually accelerated to record highs, especially in the capital cities in the June quarter. So the question is, why are these rents rising at such a fast pace, really, right? So one of them is overall cost of living has increased, including mortgages have gone up. So many landlords may be passing on some of their increased costs to tenants. One of the key challenges is really the population growth. People need somewhere to live. Obviously, Australia's population is expected to rise, and we'll touch on that in a few moments. It's effectively a supply and demand game. The more people there are and there's less properties to go around, then obviously it's going to push up the prices. So whoever's willing to pay the highest possible rent would be able to secure the properties. And also there's lack of new builds coming on the market, and there's increased construction costs, which is going to again put further pressure on the supplies. No new stock coming on the market. And something to note is that unit rents have outpaced houses as tenants are seeking cheaper housing options due to worsening affordability. So rents for units are increasing at a faster rate than houses. And also there's research, right? Financial Review have published that in the June quarter, Sydney rents rose by 8.1%, which is fastest 3 months on record in history, and Sydney houses increased by 6.1%. Same with Melbourne, there's been 4.2 and 4% increase in units and house rent respectively. Brisbane increased by 6% for units and 3.6% for houses. So it is in favor of the landlords, but of course we need to look at the mortgage costs have risen for landlords and someone has to pay for this. And unfortunately that ends up being the tenants, and Australia really needs to double the number of rentals and listings to 24,000 properties to cater for the increased demand. So should you really be continuing to rent if you are continually paying someone else's mortgage? And rates will go up and rates will go down, and over time when rates do come down, your landlord is not going to pass that rate cut as a rent cut, and it will only keep rising over different cycles, and rates go in cycles as well.
Yep. And as you said, Sana, obviously rates will go up, rates will go down, but rents won't necessarily fall back. Obviously, again, it's a function of supply and demand. But if we were to work with the population growth, your rents are unlikely to pull back. So you really need to question whether you want to be at the mercy of someone else deciding your rents, or you want to actually be in control and knowing that you're paying down your own home, which you will eventually own and not have to pay anything for. And effectively, with rates falling at some stage, your costs will reduce at some stage, but rents won't necessarily mean that your cost of living will reduce in future.
And there might be properties which are listed for lesser rents, but will it drop to the previous levels? Unlikely, right? Because that's the rent that you're paying. And with inflation, costs have across the board risen, but rates have gone down. And also the mortgage that your landlord has loses value, right? The properties are worth more over time. So should you be really getting into your own property to enable that and having a fixed mortgage, which is reducing over a period of time? And also repayments increasing. Of course, you can't control that, but it's better than renting. Well, at least from what it seems from the example that we'll show you shortly. So the reality of renting, what you need to question is how long have you been paying rent for?
So yeah, effectively, how long have you been paying this rent for? Like say, hypothetically, you've been paying $500 per week. Your annual rent is $26,000. Now, looking at it over 3 years, that's $78,000. Then 10 years, it's about $260,000. This is actually assuming that, that your rent stays at 500 per week, which is unlikely to be the case over time. It may change, may go up. There was this article recently in the news where this lady, Emma, had paid $500,000 in rent over a 20-year time span. So she effectively paid on average a $480 per week for 20 years, and eventually she had paid $500,000 in rent. So imagine if she had the opportunity to buy her own home historically, then she may have actually paid off a home in this time, because obviously 20 years ago prices were much different.
Yeah, and her rent continued increasing when mortgage would have continued decreasing as a whole, and with a consistent payment of your own assets where you're building equity month on month and creating equity to invest in further assets in terms of buying further investment properties, right? When you build equity, either increase in value or reduce mortgage would have created opportunity in Emma's case to buy further assets, to build wealth over the long term. So yeah, rent is really up dead money.
Yeah. Though I'd like to add, though, obviously it comes down to your resources and your circumstances. Not everybody wants to or is able to build wealth through real estate, but the thing is, housing is a basic necessity. So if you are able to move into your own home, then obviously if these numbers are to go by, then it would make sense to be in your own home rather than continue renting for the long haul. And I think a lot of the time it is to do with people wanting to live in a particular suburb, or they don't want to move away, or they might have some preconceived ideas. But we believe that you need to buy where you're able to afford and kickstart that journey, at least. Even if you then decide to rent west down the track, so buy your first home and you decide to rent west and move elsewhere, at least you're hedged, right? Like even if your rent's going up, then if you do convert this particular property to an investment property, the rent you're charging from your tenants would also increase. So it kind of protects you in some shape or form. And also it hedges you from future property price rises. So at least you are actually in the market already.
So we keep getting asked, right, is now the right time to buy property? Only if we had $1 for every time we were asked that question every single day. Well, there won't be an alarm bell going and telling you that, go buy now, and markets keep changing, property markets keep going in cycles, and what's happened in Australia and maybe even across the world over the last few years has really been unprecedented. And as we've spoken before as well, that the immigration ties between the prime ministers of Australia and India in the recent times will lead to an increased net migration of 1.5 million people to arrive in Australia by 2027. And with the existing population growing, we will have a 2.18 million increase in population. We need 329 houses every single day built brand new to cater for this, and 478 houses every day to meet the overall population growth. So this is only really 40 months. You know, a lot can happen in 40 months in terms of growth, in terms of interest rate. And when is now going to be a good time for you to be really getting into the market? Either you're in the market or you're not. Often people think it's about timing the market, when in fact it's really your time in the market. The sooner you start, the younger you start, the better it is, and the more property cycles that you're able to see. You need to make decisions based on your own circumstances when you're able to, your own economies, rather than following the herd, because people often wait to see what other people are doing. But what you need to say is, well, I can do this today. I may not be able to do it in 12 months, so let's do it today. And policies change, your life circumstances change, your jobs will change over time. So when are you really able to take action? That should drive if now is the right time for you.
That's exactly right. And the idea really is right. Like, if the population growth is projected to be this, and we need so many new houses over time, like, and Australia is not going to be able to cater for this many new houses built every single day up until that point in time when the population has grown, then it will put pressure on rents and prices as well. So it's not necessarily going to get any cheaper down the track. So you need to be prepared for it and make up your mind whether you want to just leave it to the markets to decide your fate, or you actually take control and make something happen, or buy your home and get into the market. So we just have this graph that we're sharing from Core Logic. It's just really to show the trajectory of property growth over the past 30 years. As much as, we would all like to, we'd hope that, that prices pull back, but overall, over the longer term, it has been on the way up. That's not to say that, that it will always be going up, but obviously if the data is to go by, if the numbers around the population or immigration levels is to go by, then there is very low likelihood that it's going to be pulling back significantly. So obviously you need to weigh this up. They say, as I say, history repeats itself. It may not, but you need to take control and have your own home, so you don't have to continue paying off someone else's mortgage down the track.
So it's important to do your numbers and determine how much do you actually need, and what constitutes part of making a property purchase. So there's obviously a deposit that you need to put in. Then there's stamp duty. Some states have first home buyer stamp duty concessions. So depending on the purchase price, you might be able to get some waivers or discounts on stamp duty. There's legal costs where you engage a solicitor to do your conveyancing or the settlement of the property and any property searches and due diligence. There's building and pest reports. There's strata reports if you're buying an apartment or a townhouse, to make sure you're buying in a good building or a good complex. And there's other costs to be budgeted for, like settlement adjustment, mortgage repayment, mortgage registration costs, and council rates that vendor might have paid for. So there's a few bits and pieces that you need to think of when doing the purchase.
I'd like to add on that, like this, it's the other costs that don't tend to get budgeted. I guess for me, when I was a first home buyer, this actually came as a bit of a surprise. So you need to allow maybe a couple of grand buffer there, because, for example, your property is settling, say, 31st of July in any year, and the vendors actually paid council rates until 30th of June next year. So you need to be able to fund that, because you will be owning the property effective 31st of July. So you're liable for that. So the solicitor will make adjustments to those figures. It could be things like council rates, water rates, strata costs. So all those bits and pieces. So it would be good to take that into account in doing your numbers as well. So now, I guess, looking at how much do you need. So you may or you may not have heard of this first home guarantee scheme. So typically, if you have less than 20% deposit, you're actually required to pay lender's mortgage insurance. The lenders charge this fee, and it really is to protect the lender. It's not to protect you. It's really to protect the lender in the event you're unable to pay the bank back the money back. It's really a risk fee that the bank is charging. On the other hand, the first home guarantee scheme was released so that people don't have to pay lender's mortgage insurance, because the government actually guarantees first time buyers So, they guarantee the 15% deposit, and you can do as little as 5% deposit. So the government guarantees 15%, so you save on lenders' mortgage insurance. And you can, also access better rates in these sorts of scenarios because the bank pretty much treats you as if you haven't incurred lenders' mortgage insurance or you have put in a 20% deposit. The thing is, right, you need to be a permanent resident or citizen of Australia. You can't really be a New Zealand citizen who's moved to Australia. Actually, I was looking at it for a client of mine recently. So it's only really actual Australian permanent residents who are eligible for it. And you need to have your income less than $125,000 if you are an individual, or less than $200,000 for a couple. So yeah, so if you meet that criteria, then you may be eligible for this. Currently, the government's released about 35,000 spots. The thing is, right, like historically, this scheme was only really available to citizens and it did not include permanent residents. But as of 1st of July 2023, even permanent residents are eligible to access this benefit. So now I understand that about 1 million more people have been made eligible for it, but only 35,000 spots are available. So effectively 35,000 homes.
There are those, depending on where you're buying, whether you're buying in Sydney, Brisbane, Adelaide, wherever you're buying. So different cities have different thresholds as to the max purchase price. That's for metro. And there's also different thresholds if you're buying in the regional areas. So obviously depends on individual circumstances. And if you're buying something for 1.5 mil, then of course this may not suit, but it is for first home buyers who are really wanting to get into the market with limited deposit and get the journey started.
Yeah, and I guess the thing is, right, as we touched on earlier, some states have stamp duty concessions as first home buyers. So effectively, this 5% cost plus some legals and buffers is all you need to buy your home. But I guess we help our clients do this research in terms of where does it fit in, which lender we could go to, how much money they need. So we walk you through that when we work with you on your first home buying journey. So now we'll just go through an example, right? So say you want to purchase your first home in Sydney for $700,000. So you need about 5% deposit, which is 5% of $700,000, which is $35,000. Assuming you obviously qualify and you're eligible and you meet the criteria that we just went through earlier. So when you look at stamp duty aspect of it, so if we're in New South Wales, a $700,000 property, primary residence, if you're first home buyer, it's no stamp duty there. Sorry, we have selected a new home, but it can be established home as well in New South Wales. So there's no stamp duty, $0. There's some minor mortgage and transfer costs. You might have legals and some other costs where we've allowed $3,000 for it. So approximately you need about $38,000 to complete this deal. And the loan will be about 95% of $700,000, which is $665,000. Obviously, you need to be able to show serviceability for this particular loan. And something to note is, as you can see, there's no LMI, so you just owe the $665K to the bank. So if you were ineligible to access this first home guarantee, typically you'd have a 10% deposit. You'd require about $70,000 to put as a deposit. You may still be eligible for stamp duty concessions, but see, you would incur lender's mortgage insurance of up to about $14,000 in this scenario. And this 14,000, whilst it can be added to the loan, you'd be paying interest on it for the loan term, which is typically 30 years. And something to note is if you are paying LMI, the banks will be charging a higher interest rate due to the lender's mortgage insurance being involved. Whereas under the first home guarantee, you're treated as if you're putting a 20% deposit towards your home.
So building your team, it is important to have advisors around you, and how you get started is the first is, having a mortgage broker on your team. So as Property Twins team, we assist with lending arrangements for first home buyers and for investors. So it's important to make sure your numbers are reviewed and you know what you're getting into, what your options are, what your repayments would be. And it's important to do all that due diligence before you go and get a credit hit on your file. So unfortunately, what people end up doing is they go to lots of different lenders or different banks themselves and end up getting lots of credit hits. And, being a first home buyer, I've been in those shoes where I didn't know that, what impact it could have on the credit file. So make sure you do your numbers upfront, and we assist our clients with that options and the selections upfront. Then you need a solicitor on board, where the solicitor does the conveyancing, where they talk to the vendors and your bank in terms of booking settlement. They look at all the searches for the property that you need to do, like title search, any other building approvals for the building that you're buying, ordering any strata and building report, and really doing the numbers when it comes to settlement to make sure that your obligations are met and the vendors does their bit as part of the process of the legal process, and the property is actually successfully transferred to you and registered against your name. And then there's building and pest inspectors who can look at the property, any issues, say with the showers, with retaining walls, with the building structure itself, any pest issues in the property. So they go and look through the whole property and give you a report which goes through any challenges or any alarm bells in the property that should mean you need to pull out of the deal during your due diligence phase. So it's really important to make sure you get a good building inspector on board. And then there's a strata inspection company. This is relevant to people buying units or townhouses, where you do reports around how the complex is run, how much money does the strata have. So in case there's any issues like painting the building or doing the gardens, that there's enough money, or are there any known issues with water leaks in the complex, or has there been any major costs incurred like lifts breaking down in the building. So strata report forms a massive part of your due diligence. So, all these four stakeholders are an important part of your journey when you're doing the due diligence for your purchase, and even before you do the purchase, doing your numbers. So building your team is very important.
Oh, I just wanted to also touch on strata inspections, right? Like I know, like obviously these are some extra costs that you would incur, but it's so vital because in the past we've done strata reports for buying properties in our own portfolio, and turned out that there were some issues, say with an apartment, and there's a leak, and from the upstairs bathroom, that there was like the ceiling was peeling, and we were told that the vendor or the strata will get it fixed before settlement. But the challenge was that the strata didn't have the money, and we were like, how would they actually fund it? The idea was that the strata would have raised special levies really for that building. So I would have ultimately have had to pay for it. So I guess the idea is you get the right team around you who's able to support you to make the right decisions, and they're knowledgeable in being able to point you in the right direction, whether it be, on lender selection side, because lender selection will impact your future journey. Say hypothetically, if you intend on, say, building a property portfolio down the track, it's important you get finance right for your first home to begin with. The right solicitor, because they'd be able to support you in making the right decisions in terms of the quality of the deal around, like making sure that, you're protected effectively and your rights are actually represented correctly. The right building inspector who would be able to give you the right information. Obviously, don't use a building report that is being provided to you by the vendor's real estate agent, because you need to do your due diligence independently and not really be swayed by someone on that.
Because people do end up relying on vendors' reports, and often they are skewed or written in the favor of the vendor. So make sure you have independent advice as part of this process and building your team. So in terms of the steps that you need to take, the first step is really looking at your borrowing capacity, where you engage a mortgage broker. We help our clients with that. Speak with our team to assess your borrowing capacity and then apply for the pre-approval. Finance comes first. Often people think property comes first, but if you don't know what you can borrow, how to structure it right, what your options are in your best interest, you can't complete the deal. Then it's the legals. Contact a solicitor so they can talk you through your rights, your obligations, and they're ready to review a contract of sale before you go and sign any contracts. Then the next step is looking for properties, shortlisting properties and making an offer upon the acceptance. So you sign the contract of sale. make sure you understand your rights around the cooling off period, especially in an event you're paying, say, lender's mortgage insurance. You cannot just go and put 10% deposit and unconditionally exchange the property. So often you might be pressured by real estate agents to just sign a contract and pay 10% deposit. But just remember that your finance is not yet approved. You haven't done any building inspections or strata reports. So you make sure you're getting that allowance with cooling off periods or finance and building and pest clauses and the settlement timelines. And definitely, we as our clients, brokers do guide our clients on this, but there's also a legal element to it. So your solicitor should also be shedding light on that. And then it's a formal loan application where the bank goes and values your property. It assesses if the property is suitable before issuing an unconditional loan approval for your purchase. After that, you engage the building and pests companies or strata report companies. Make sure your solicitor orders for it, or you find a reliable company where you're getting them from. And in some states, you would be also able to negotiate on the price of the property based on the issues found. But in other states, you may not be able to. You're buying as is. So make sure you understand your obligations for where you're buying. Then the unconditional exchange happens where, the finance is approved, you're happy with the building and pest, and you're going unconditional with your purchase. That's when you pay your remaining deposit based on the agreed amount. Some states you're putting 5 or 10% deposit, other states you are putting an agreed amount. So again, make sure you navigate that and make sure you are protected as part of that process. After the unconditional exchange, your bank would be preparing the loan documentation and loan contract for you to sign. The lender issues the loan documents for your review and your signature. And at the same time, your solicitor does the calculations around what you need to pay, what the vendor needs to pay, and prepare for the settlement of the property at the proposed date based on your original contract that you signed. And yeah, and then the settlement occurs. So prior to the settlement, your solicitor, a few days prior, your solicitor will send you the settlement figures and calculate those numbers. So depending on your bank, make sure you have the money in the right account to be deducted at settlement, and your solicitor will have the authority to make those arrangements and payments directly from your account under most cases, again based on which bank you're going with. And then the last is the most exciting part, which is picking your keys. That's the most fulfilling part of the process, when you get that email from your solicitor or the call that your property settled, and then you go and get the keys from the real estate agent.
So if you're a first home buyer or even a property investor, and if you'd like to discuss your specific scenario and get started with your first home purchase, and obviously with Sana's and my guidance, implement that process, you can set up a time with us on meetme.so/property twins. The team will also pop in the link in the comments to set up a time. So this is just the no obligation 15-minute call that we jump in with our prospect clients. And if you're ready to get started, and if you are planning on purchasing your home in the next 2, 3, 6 months, this would be an ideal time to get in touch so that we can help strategize for you and help you with the whole pre-approval process, and then moving on, help you buy your first home.
Awesome. Well, thank you so much, guys.